I think the inflation pickup is transitory. We are seeing clear upward pressure here. We do think the inflation numbers in the euro area will move up further, peak at the end of the year, but we then think they will soften again when we go into 22, because you still have a lot of slack, wage growth is weak, and we think it'll take quite some time for inflation pressures to firm in the euro area. And that is really where the persistence comes in, and why the Governing Council yesterday tightened the forward guidance and pledged to be very persistent in providing easy policy and avoiding a premature tightening, because you really want to see inflation move much more convincingly towards 2%.
Is wage growth weak? I know across the board one might take an aggregate figure, but in many, many sectors as well. And again, I've raised this point with various guests for weeks now, months now as well, that there are certain sectors that are seeing huge demand or huge supply shortages in labour. So is it weak across the board, or actually are the numbers flattering to deceive?
I think the wage picture is difficult to read. Because, partly, as you say, there are some shortages in some sectors, which I think is to be expected as the restrictions come off, as demand bounces back, and it might take a little bit of time for supply to meet rising demand. You're also seeing some distortions, of course, related to the short-term work programs, some compositional effects in the wage numbers as well. So they are hard to read, but we think the best guide to wage growth is probably negotiated wages, which in aggregate probably do a better job in cutting through the noise. What we see here is weak wage growth. So negotiated wages have actually, the wage growth has softened a bit here relative to pre-pandemic levels. And I think that's consistent with our overall read of the labor market, that we still have a lot of slack.
Jari, we were talking before about the dissenters at the ECB board, like Belgium and Germany. To what extent are we going to witness fairly strong pricing pressures in those two economies as the ECB tries to hold the line and be persistently accommodative?
Yeah, I think we will, particularly in Germany, where we think headline inflation will hit 4% in November. So that's clearly higher than elsewhere in the euro area, because we think Germany has less slack than the South. That's partly because Germany came into the COVID crisis with less spare capacity than, for example, Spain. And also Germany was hit less hard in economic terms. So, the decline in GDP was smaller. So I think that's normal. But I think key point is that even in Germany, that pickup in inflation is not sustainable in our view, and will also soften as we go into 22. So we are likely to see differences in inflation levels across the euro area, but of course the ECB is focused on the area-wide inflation rate. And as I said here, after the near-term pickup, we think there's quite some ways to go for underlying inflation pressures to really firm sufficiently for them to consider exiting from the very accommodative policy.